Hey everyone, buckle up because we've got some potentially chilly news coming out of the crypto world today, courtesy of Coinbase Institutional. It looks like they're signaling that the big crypto bull run we've been seeing might be running out of steam. They're even hinting that the market could be gearing up for a crypto winter. You know, one of those long stretches where prices drop and things kinda stagnate for a while. What's making them think this? Well, a couple of signs are flashing warning lights. Bitcoin's price has dipped below its 200-day moving average, which is often seen as a key support level. Plus, venture capital investment bets the big money flowing into new projects has slowed down. Based on this, Coinbase is thinking the market might not actually hit rock bottom until sometime in the middle or maybe late second quarter of 2025. Yeah, quite a way off. So, the Coinbase report lays out a few reasons for their current concerns. Tech chart signals. This is a big one. Both Bitcoin and the Coin50 index, which tracks the top 50 coins by market cap, have fallen below their 200-day moving averages. For the Coin50, this happened back in late February 2025. And for Bitcoin, it was late March 2025. Chart watchers see this as a pretty strong signal that we could be in for a longer-term downtrend. Total market value. If you look at the total value of all cryptos except Bitcoin, it peaked at around $1.6 trillion back in December 2024. But by mid-April 2025, it had tanked by a massive 41%, down to $950 billion. Ouch! That's even lower than where it was for most of the period between August 2021 and April 2022. Venture capital money. Okay, so VC investment did pick up a tiny bit in the first quarter of 2025 compared to the previous one. But, and this is a big but, it's still way down, like 50 to 60% lower than the peak levels we saw during the crazy 2021-22 cycle. This really puts the brakes on new money coming into the ecosystem, especially for altcoins. The bigger economic picture. Let's not forget what's happening in the wider world. There's a lot of uncertainty out there. Things like global tariffs being thrown around, governments tightening their belts, less spending, maybe higher interest rates, and traditional stock markets not doing so great. All this puts extra pressure on riskier investments. And yeah, that includes crypto. David Duong, who heads up global research over at Coinbase Institutional, put out a note basically saying this. Their model using that 200-day moving average for Bitcoin suggests that its recent sharp drop officially puts it in a bear market cycle, starting from late March 2025. But when they look at the Coin50 index, it seems like the whole crypto asset class has pretty much been trading in bear market territory since the end of February 2025. Just to drive the point home, Bitcoin fell below its 200-day simple moving average back on March 9th, 2025, and has basically stayed there since. That's a classic sign that the long-term momentum might be shifting downwards. Traders watch that 200-day SMA closely. Consistently staying above it usually signals a bull market, and staying below it, well, you guessed it, often signals a bear. Now, Duong did point out that defining a bear market in crypto can be tricky. We often see drops of 20% or more, which is kind of normal here. In the stock market, a 20% drop is the standard definition of a bear market. But the Coinbase report argues that just using that 20% number doesn't always capture the real damage, like how it affects investor sentiment and leads them to adjust their portfolios, even after sell-offs that are sharp but maybe don't hit that 20% mark. Duong noted, "We've seen in the past that declines driven by market sentiment, even if they don't reach the conventional 20% threshold, can lead to defensive portfolio setups." In other words, we believe that bear markets fundamentally represent shifts in market structure, characterized by weakening fundamentals and reduced liquidity, rather than just their percentage declines. Basically, he's saying a real bear market is more about the underlying health and money flow in the market changing, not just hitting an arbitrary percentage drop. Besides the 200-day average, Duong also highlighted another tool they use, looking at Bitcoin's risk-adjusted performance. They measure this using standard deviations compared to its average performance over the past year. It's another way to try and spot these potential downturns. Here's something interesting. Even when Bitcoin was smashing records earlier this year, hitting prices well above the roughly $70,000 peak from 2021, that rally didn't seem to make venture capitalists much more eager to take risks. As we mentioned, total VC investment stayed stuck at 50 to 60% below those 2021-2022 levels. So, that's the latest analysis from Coinbase Institutional. Looks like they're advising caution and preparing for potentially tougher times ahead in the crypto space. What do you guys think? Are we heading into a crypto winter, or is this just a temporary cool down? Let me know in the comments below.